Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Peabody Energy Corporation Annual Report. Peabody Energy Corporation offers a diverse range of businesses and services that cater to various industries. The company's primary focus is on coal mining, where it operates through multiple segments including seaborne thermal, seaborne metallurgical, Powder River Basin, and other U.S. Thermal. The company provides thermal coal to electric utilities, which is used for electricity generation. It also mines bituminous and subbituminous coal deposits using surface and underground extraction processes. Additionally, Peabody Energy Corporation supplies metallurgical coal to steel manufacturers, including hard coking coal, semi-hard coking coal, semi-soft coking coal, and pulverized coal injection coal. In addition to coal mining, the company engages in trading of coal and freight-related contracts. It also provides transportation-related services, which enables it to supply coal to various customers across different regions. Peabody Energy Corporation operates globally, with a presence in over 20 countries including the United States, Japan, China, Australia, and India. Overall, the company's businesses and services can be summarized into several key areas: coal mining, thermal coal sales, metallurgical coal sales, trading of coal and freight-related contracts, and transportation-related services. Der Aktienkurs von Peabody Energy Corp. BTU stieg in den letzten 12 Monaten etwa 105% bis 120%. Dieser Anstieg ist auf eine Kombination aus einer verbesserten Marktstimmung für Kohl, strategischen Unternehmensentwicklungen und günstigen globalen Energiemarktbedingungen zurückzuführen. Ein der wichtigsten Faktoren war Diversgebung der Marktstimmung gegenüber Kohl. Im zweiten Halbjahr 2025 kam es zu einer dramatischen Stimmungsänderung, die durch ein unterstützend politisch Haltung großer Lieferant und Käufer begünstigt wurde. Insbesondere eine Ankündigung des ehemaligen US-Präsident Trump zur Unterstützung der Kohleindustrie führte zu einem Kursanstieg bei Peabody Aktien. Darüber hinaus trugen operative Verbesserungen und strategische Initiativen von Peabody Energy maßgeblich zum Erfolg des Unternehmens bei. Die Expansion des Metallkohlegeschäfts, insbesondere in Australien, wurde als Motor für langfristiges Wachstum angesehen. Der Hochlauf der Centurion-Mine in Australien erfolgt früher als geplant, was zu einer deutlichen Steigerung des Nettobarwerts der Mine und voraussichtlich zu höheren Erlösen aus der Metallkohle führen wird. Peabody profitiert auch von günstigen Marktbedingungen im Kohlesektor. Dazu gehörten eine Deregulierung in den Vereinigten Staaten und Australien, Produktionsbeschränkungen in China und stark steigender Import in Indien. Es gab auch ein stark in Nachfrage sowohl nach Energie als auch nach Kochskohle. Die starke Performance des breiteren Energiesektors trug ebenfalls zum Erfolg von Peabody bei. Der Energiesektor war im Jahr 2026 der Sektor mit der besten Performance im S&P 500 mit einem Plus von über 20%. Peabody profitiert von der Marktverschiebung hin zu traditionellen Energie- und Rohstoffaktien. Insgesamt kann man sagen, dass die Kombination aus einer verbesserten Marktstimmung für Kohl, strategischen Unternehmensentwicklungen und günstigen globalen Energiemarktbedingungen dazu beigetragen hat, den Aktienkurs von Peabody Energy Corp. In den letzten 12 Monaten etwa 105% bis 120% zu steigern. Peabody Energy Corporation maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Peabody Energy Corporation trades at a higher price-to-book ratio of 1.17 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 38% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The income statement shows that, the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of various key performance indicators. On the growth side, seaborne metallurgic coal export revenue saw a significant increase of $1,034.8 million. Additionally, domestic and export thermal coal revenues experienced growth, with increases of $150.8 million and $1,060.6 million respectively. Committed revenue from contracts with customers is also expected to contribute significantly to revenue growth, totaling approximately $5 billion over the next 12 months and thereafter. Furthermore, equity method investments grew by $14.40 in 2025, indicating a positive trend in this area. On the other hand, some regions experienced decline in revenue. For instance, Australia saw a decrease of $328 million. However, the U.S. market showed growth of $91 million. Derivative contracts and financial trading contracts also had an impact on revenue, with values of $78.1 million and $11.5 million respectively. Overall, these indicators suggest that revenue growth is driven by seaborne metallurgic coal exports, thermal coal sales, committed contracts, and equity method investments. Conversely, decline in revenue can be attributed to regional market fluctuations, such as the Australian market. The extracted summaries provide some insight into the company's financial performance, but they do not directly answer whether the company is generating positive operating cash flow. The data on operating cash flows related to leases suggests a relatively stable trend, with $34.9 million in 2025 and $34.1 million in 2024 for operating leases. However, this information does not account for other factors that may impact the company's overall operating cash flow. The interest expense for 2025 was significantly lower than 2024 at $43.9 million compared to $46.9 million. This reduction in interest expense could indicate a positive trend for the company's financial performance. However, the main components of interest expense reveal that the company has significant obligations, including finance lease obligations and financial assurance instruments. While this information suggests that the company may be struggling with negative operating cash flow due to high interest expenses, it is essential to note that there is no direct data on the company's total operating cash flow for 2025. Therefore, it is challenging to determine whether the company is generating positive or negative operating cash flow based solely on this information. Peabody Energy Corporation's debt levels and interest expenses have undergone significant changes over the past year. In terms of debt levels, the company's total debt at par value has decreased slightly from $354.4 million in 2023 to $340.8 million in 2024. However, a closer look reveals that the U.S. debt level has actually decreased by $97.7 million, while the Australia debt level has increased by $169.5 million. In terms of interest expenses, there is a notable change related to derivatives. The company's interest expenses related to derivatives have decreased significantly from a loss of $78.7 million in 2023 to a gain of $76.2 million in 2024. This represents an increase of $154.9 million, but a decrease in loss. Additionally, the net interest expense has also decreased by $3 million from $46.9 million in 2023 to $43.9 million in 2024. Overall, while the company's total debt level has decreased slightly, there are mixed signals regarding its debt levels across different regions. However, the decrease in interest expenses related to derivatives and net interest expense is a positive trend for the company. The performance of various segments and regions has been analyzed, revealing both positive and negative trends. On the positive side, Australia has shown significant growth in revenue, increasing by a substantial 85.6% from 2024 to 2025. This improvement is also reflected in the segment's adjusted EBITDA, which, although declining at -52.5%, indicates an upward trend compared to the U.S. segment. In contrast, the U.S. segment has struggled, with revenue declining by a notable 9.1% from 2024 to 2025. Furthermore, the adjusted EBITDA for this region also saw a significant decline of 45.2%. These figures suggest that the U.S. segment is lagging behind its Australian counterpart in terms of performance. Management's statements about the company's outlook or strategy are somewhat ambiguous. While they emphasize transparency and compliance with accounting standards, there is no clear indication of a specific direction for the company. The focus appears to be on managing financial obligations, such as debt and lease commitments, rather than outlining a long-term vision. The company has taken steps to manage its derivative-related activities and has implemented tax planning strategies to minimize liabilities. However, these efforts do not necessarily suggest a broader strategy or outlook. Instead, they seem to be focused on maintaining stability and navigating existing financial obligations. Overall, management statements convey a sense of caution and prudence, rather than bold ambition or innovation. Acquisitions and divestitures are significant business transactions that can impact a company's financials and operations. In recent years, Peabody Energy Corporation has made several notable acquisitions. One of the key acquisitions was Middlemount, although the nature of this transaction is unclear. Additionally, Peabody acquired 75% equity in R3II for cash and contingent consideration through its subsidiary, R3. This acquisition involved a joint venture with unrelated partners, where Peabody contributed $11.3 million in 2024 and $8 million in 2023. On the other hand, divestitures refer to the sale of assets or businesses by a company. In this context, R3 sold 7 projects to an unrelated party in November 2024. This transaction indicates that R3 is streamlining its operations and focusing on core activities. That concludes the financial summary for Peabody Energy Corporation. Feel free to comment below, and I will be happy to answer them when possible.